very good afternoon on behalf of India FinTech Forum. I am Medha Sinha, and here we have with us Mr. Gaurav Chopra, founder and CEO of IndiaLends, an online marketplace for credit products ranging from credit cards to personal loans. Mr. Chopra founded the company in 2015 and has already achieved a customer base of around 8 million. In addition, he's also the founding member of Digital Lenders Association of India, which comprises over 85 member companies providing digital lending and related services to the nation. Hello, Mr. Chopra. Welcome to the FinTech Leadership Series.
Hi, Medha. Thank you so much, and good afternoon to everybody who will be watching this.
Great. So let's begin. Second round of loan restructuring was announced by the RBI governor today as part of the COVID-19 stimulus effort. This, in addition to the existing restrictions on reclassification of assets, creates the possibility of disguised stress in the balance sheet of banks. How do you see the credit space being impacted in the long term, and what are the implications for financial marketplaces like IndiaLends?
So, Medha, restructuring is definitely a double-edged sword. The idea behind any restructuring is that the expectation is there that the future condition, which is mostly the repayment capacity and the ability of the individual or the business who has taken the loan, becomes better. And hence, businesses, are given the restructuring or the moratorium options for that purpose, right? So, from what I see, I would say this is definitely a step in the right direction. We have witnessed the last 12 months. The downside obviously was the COVID environment, but at the same time, we've also witnessed many businesses coming right back up, delivering better than expected results, and seeing growth coming back. And the whole hypothesis that there was pent-up demand is somewhere coming true as well. So I think hopefully this will continue. We as a country will be able to fight back the pandemic. And as businesses start growing, as individuals linked with these businesses start getting their salaries back or getting their wages back, I'm sure that the repayment capacities will also come back, and overall stress will be avoided. At the same time, I think financial institutions are doing the right thing by putting in enough coverage and enough reserves for fighting with any stress that comes in, and that most of the bigger organizations are not doing it on a monthly or bi-monthly basis, but even more periodically, right? So that gives the comfort that even if there is stress, it is being accounted for, and it's a matter of time that we come back. Going to your sorry, you were saying something?
No, please continue.
Yeah. So going to your next few questions. See, India is continues to be a credit-starved country, and there is no doubt about that. And for any country of our size to grow, credit is going to be the major force behind it, right? So both from that brings us to both demand and supply. And as such, demand is not an issue. In fact, demand is always more than supply. Supply, on the other hand, is also on the rise. If you look at the sheer number of banks or NBFCs that were there, let's say even a decade back, to what they are today, the number is much higher. If you look at the balance sheets of many of these entities, they are much larger. At the same time, there are new entrants who have come in and made a mark for themselves. These are the small finance banks coming in. We have fintechs coming in. And, from that perspective, the supply has also been growing. At the same time, there is enough capital that is pursuing these new entities or existing entities. So the idea here is, or the thought here is that, supply is also not a constraint, but what it requires is a proper matching of the supply and demand. Each lender has his own risk appetite. They have their own segments where they want to lend to. They have a certain pricing in mind. And similarly, borrowers are in all shades, right? There are individuals who are looking for small ticket loans. There are businesses who are looking for, multi-billion-dollar loans. It is about proper matching of the supply and demand. And, that is where marketplaces and platforms like IndiaLends come in and are well positioned to help lenders find the kind of demand that they're looking for. At the same time, help borrowers to find the right lending partner for them. And with the post-COVID world, I think digital marketplaces like ours are going to benefit from the same.
That's nice. So, Mr. Chopra, you mentioned that there has never been a deficit of demand. So, on that note, a large proportion of Indian population has traditionally remained outside the net of formal credit. What are the challenges in building a credit score for such customer groups?
So, Mera, credit score by definition is built when somebody borrows, and we are able to see payment behavior, right? So, again, by definition, if somebody has not borrowed before or has not taken formal credit, then they will not have a credit history.
Right.
However, data science has evolved quite a lot, and we are in a position now to essentially do not just basic things such as mapping behaviors of people who have borrowed before with those that have not, but go in much and take much larger strides on looking at alternative forms of data. This could be trying to look at what is the repayment capacity of somebody. It could be how we could lower the fraud risk by using digital origination channels. At the same time, looking at some traditional methods as well. This could be in the form of taking guarantees from employers or neighbors or friends who are in the formal ecosystem. At the same time, offering loan products that are more suited to the needs of a first-time borrower or a first-time formal economy borrower. What that means is it could be a lower ticket size to start with. The payment frequency could be, on a weekly basis as opposed to on a monthly basis, which gives both the lenders the confidence that yes, the borrowers have the intent to pay back, but at the same time also make it easy for borrowers where they are not taking huge bites of debt, but are doing it in a low and grow manner. So I think there is a lot of effort that has gone in this space, and if we even compare the last 5 years, the number of people who are becoming first-time borrowers or are entering the formal credit economy has been growing. So this trend will continue, and we've seen similar things happening in the Western geographies as well. So I have no doubt that India is on the right path as well when it comes to growth in this segment.
That's great. So IndiaLends recently raised around $5.1 million from ACP partners and DSG consumer partners. What are your future plans in light of this funding?
Yes, so DSG and ACP have been our supporters from a long time, and I think with this whole COVID situation coming in, we also decided to change gears slightly, which meant go slow on a few things and go super fast on a few others. And with that in mind, our objective is twofold. One is that we feel that lenders appreciate and like the services that we provide, which till now were on the lines of loan origination and providing credit underwriting services. We felt that this was the right time to expand that scope of services to include the entire end-to-end loan management, which would mean going right up to delinquencies and collections. So that is one area where we are investing and are going to be helping our lending partners, get more services from us. At the same time, we also realized that there is a huge demand for other platforms which might not be into lending to actually lend to their consumers or customers and create a win-win situation whereby they are able to monetize their existing user bases as well as provide loans to their own customers and create stickiness on their platform itself, and make the user experience better for their customers where they don't have to go elsewhere. So with that in mind, we started what we are calling as lending as a product service. This is a B2B SaaS infrastructure that we have made live, where any company that has a user base of, let's say, 30, 40 million plus can simply plug our APIs in, and our entire range of lenders, which today are about 55 or so lenders, will be available on that platform. We built it in a native format. User experience is fabulous on this, and here we are, benefiting from the user bases that these companies have created. At the same time, they are benefiting from the marketplace that we have created, so they don't have to work with lenders directly. They don't have to create the ops infrastructure. They don't have to create the risk analytics behind it, and that has been well received. So we've got a few large partners on that front already, and with this money coming in, we are going to expand on that service and build our B2B lending as a product service further.
That's great. So you spoke of your partners relying on you for risk analytics. Now, modeling risk accurately is key to making credit decisions. In such uncertain times, what sort of factors do you think will be most significant in mapping credit risk?
See, it is definitely a challenging time, to even to do any sort of lending right now, right? And the biggest reason is that there is uncertainty right from looking at what income somebody is drawing. It's not easy to figure out that if somebody's getting a salary today, will he get the same salary tomorrow or not? Or if there is a business that's in operations today, will it have the same kind of demand or even remain in operations tomorrow? Right. So that is one a big challenge. And the way that challenge is being looked after is essentially trying to gauge, the income and expenses of the individuals here. So, it is right that incomes have fallen, or they had fallen. Now they have started coming back. But at the same time, expenses have also changed, right? It is fair to say that for at least for individual consumers, the overall expense budget has shifted. More is being put into savings. People do realize that they need to save for a rainy day. At the same time, there are limited opportunities to even spend that money. Earlier, 1 year back, we would travel. There were weddings happening. You would be able to go out, eat out. All that has been restricted right now, right? So overall, disposable incomes have gone up, and I think traditionally we have looked at underwriting as looking at how much somebody earns and looking at his and trying to predict his expenses. I think it's time to also look at expenses in a far granular manner, and then trying to see how we can lend there. So that is one way of doing it and one challenge. The other is, I think, underwriting is all automated now, but I feel that there needs to be a humane part of it as well. A lot of people have lost their jobs. A lot of people have lost family members, and when you look at somebody's bank statements, that does not come out, right? So to understand what impact a person has had, and what has led to his circumstances being the way they are is important. At the same time, people who have lost their jobs, we need to see that what skill sets do they have, what kind of sectors they are in, what kind of educational qualifications do they have, and what is their future ability to earn money. Once that comes into the equation, it becomes slightly easier to, I would say, not bet, but do a probabilistic analysis of who to lend to and who not to lend to.
That's very interesting. So, Mr. Chopra, in your company's growth story going forward, what is the next step?
See, next step is, again, we have witnessed a huge shift towards digital within the COVID area, within the COVID period. And the reason for that was that, there was no other alternative. People were looking to borrow, lenders were willing to lend. But, there was no space for a person going to somebody's house to collect documents or to do KYC. So innovation automatically happened, right? And we benefited a lot from that. Our overall digital originations pre-COVID was in the 35-40% range. As of today, that's in the 75 to 80% range. So that is one area where we want to invest more, and we feel automatic growth will be coming. At the same time, even today, the respected RBI governor pointed towards KYC being digital KYC being valid, OTP-based KYC being valid. He mentioned changes to the video KYC program, which could then, also be taken as valid KYC alongside the, centralized KYC register. So all these are steps that, the industry was waiting for. Industry already had solutions for, and now the push from, the RBI is much needed and a very welcome thing to happen. And this is only going to make digital originations better. Particularly for us, this in a way takes away competition from all the, the small or offline loan originators, where we don't really need that kind of a feet on street approach. Everything will happen online. It is happening, but now competition will shift more towards us. So it's one area where we want to invest on, and one that I think the government is also supporting us on.
That's great. So finally, Mr. Chopra, what have been your key learnings in your personal entrepreneurial journey so far?
Well, that's a pretty difficult, question to answer, because essentially there is, I've been an entrepreneur now for the last 6 years, and 10 years before that, I was, in the corporate sector. So I've seen both the lives. As an entrepreneur, I would say the biggest learning, if I were to just find one, is to, know that change is the only thing that is constant, and no 2 days or no 2 weeks are alike. And that whole expectation that if something is going right, you might want to take a pause and celebrate, but also be aware that why are things right and they can just become wrong the very next moment, and being ready for that. And if I were to just extend these into other things, I would say that one big learning is that if you want to build something which is scalable, sustainable, and makes a difference, you need to hire the very best, and let them then do their job for you. There is absolutely no reason why anybody should not look for the very best talent. And lastly, I would say that when it comes to taking hard calls, the sooner you take them, the better it is. The old saying that a stitch in time saves 9 can't be more true here. And this in particular was, hard calls related to any aspect, right? Scaling down operations, difficult decisions when you have to let some people go that you've hired, or just saying and taking a pause that this is not the right time for us to be lending, or this is not the right time for us to be focusing on growth, or what we have done or invested in is not really reaping the benefits, and we need to change direction. The sooner these calls are taken, the better it is. So those are the few learnings I would say have been as part of my entrepreneurial journey.
That's wonderful. That's all for today. Thank you so much for joining us, Mr. Chopra. Have a great week ahead.
Thank you so much, Veda. It's a pleasure talking to you.